You finally have an extra $1,000. But here's the big question. How do you invest it wisely? Should you buy stocks, crypto, or just let it sit in a savings account? Today, we'll break down a beginner-friendly, expert-backed approach to investing your first $1,000, the smart way. Step 1. Before investing, secure your safety net. First, let's talk about risk management. Even top investors like Warren Buffett and Ray Dalio stress this. Before investing, make sure you can afford to lose that money. Action plan. Put at least $500 into a high-yield savings account for emergencies. Alibank, Marcus by Goldman Sachs, or SoFi are good options. This ensures that an unexpected bill won't force you to sell investments at the wrong time. As billionaire investor Ray Dalio says, if you don't have a safety net, the market will eat you alive. Step 2. The best beginner investment, S&P 500 index funds. If you want a set it and forget it investment with historically strong returns, experts like Jack Bogle, the founder of Vanguard, recommend index funds. How to do it? Use a trusted brokerage like Vanguard, Fidelity, or Charles Schwab. No commission fees. Invest $300 to $500 in an S&P 500 index fund like VOO, FXAI, or SPY, which has averaged around 10% annual returns over decades. Long-term is key. Investing consistently beats trying to time the market. Expert insight. Warren Buffett himself has said, "A low-cost index fund is the most sensible investment for the vast majority of investors." Step 3. Reduce risk with bonds and ETFs. If you want a more balanced approach, financial experts recommend bonds, which act as a shock absorber for your portfolio. How to do it? Put $200 into a total bond market ETF like BND or AGG for stability. Reinvest dividends automatically. This compounds your wealth over time. Step 4. High risk, high reward, individual stocks and crypto. Many new investors are tempted to go all in on stocks like Tesla or crypto like Bitcoin, but experts like Ramit Sethi warn that this is high risk. Smart approach. If you want exposure, limit it to 10–20% of your portfolio. Use platforms like Robinhood, TD Ameritrade, or Coinbase, but don't gamble your full $1,000. Ramit Sethi, author of I Will Teach You to Be Rich, says, "Most people who invest in individual stocks think they're smarter than they are. Play the long game instead." Step 5. Automate and stay consistent. The secret to long-term wealth? Automation. Financial planners recommend a method called dollar cost averaging, investing small amounts regularly to reduce risk. To summarize, $1 $500 emergency fund, HYSA. $2 $300 S&P 500 index fund, VOO, FXAI, SPY. 3. $200 bonds, BND, AGG for stability. 4. $100 individual stocks or crypto, optional, high risk. The first $1,000 is just the start. Most people never invest because they overthink it, but historically the key to wealth is simple: start early and stay consistent. Follow now for expert-backed financial strategies.